radar. A good performance coming in from Tata Consumer, much ahead of street expectations on revenue and profit. And there was some margin contraction, but there have been sequential improvements out there as well. Sunil D'Souza, who's the MD and CEO of the company, joins us now. Thanks a lot, Mr. D'Souza, for joining in. A couple of things that stood out. One was, Narishco regaining its growth path despite heavier and extended monsoons. But at the same time, tea prices, you had told us a couple of quarters ago that you get a better sense of where tea prices are headed once the season starts. And out here, all things are pointing towards tea prices declining from the peak. So the question then is, can we see further margin expansion? What are you penciling in the second half for the tea and coffee business? And what kind of margin expansion can we expect?
So Mangalam, thanks for having me. Yes, we've had a good quarter, 18% top line, volume growth across all the different segments and margins coming back, right? Specifically coming to tea, last year tea prices had, because of the supply-demand mismatch, had gone up by about 30%. And it was our estimation that about 20% will come off and 10% will continue to remain there. And broadly, that is what we're seeing out in the market. Now, I wouldn't read too much into a month-on-month movement on tea prices. Overall, we expect tea prices to be broadly benign from here on. In the tea business, we operate in gross margins of between a 34 to a 36 sort of number. And the reason for that is over time, we figured out as long as we're operating that number, we continue to gain market share, especially from the loose local regional players which are around in a commodity business, right? Right now, we're operating in that space. We've delivered 5% volume growth and 12% top line. So we're comfortable with pricing where it is. Right now, budgeting for roughly benign tea prices.
So what does that mean in terms of margins? Because your internal target is 50 to 80 basis points in terms of annual margin expansion. Obviously, that went out of whack because of the high prices in tea. Now that they're likely to remain benign, where do you end this year with when it comes to EBITDA margins?
So roughly, we have said that we'll grow EBITDA margins and we should be coming back to the 15 range by the end of Q4. And there's no reason for us to change that. We came in at a 13.6 this quarter. This quarter was impacted by primarily the US coffee prices, so to speak, primarily because of two things. Coffee prices have gone up, and on top of that, the 50% tariffs from Brazil, and Brazil accounts for roughly 30% of the mix for us as well as for the industry in the US. If I add that back, we're in the 14.6, 14.7 range. So we're touching 15. We have degrammed in the US in November. We've announced a price increase earlier in July. We've announced one more in January. So we hope to get the US margins back on track, basis which we will be broadly on a 15 or thereabouts EBITDA margin by Q4.
All right. Hi, Mr. D'Souza. Good morning and good to see you. Could you tell us what's the target market share in both tea as well as the salts market?
So salt market right now, we're touching about 40. The good part is we've got to balance both the market share and volume growth, right? Salt, we had good volume growth this quarter. We had good margin growth. And we aim to be 40 or for thereabouts a longer term period. We have higher ambitions in salt because we've got a full play right from solar up to rock salt, all the different price value equation straddled. In tea, we are at 2022 share player. We continue to grow volume and value consistently. Now, there's one thing you've got to remember in tea is a significant portion of the business is now shifted to quick commerce, e-commerce, and which channels are not consolidated by Nielsen today, as well as in modern trade, which is now roughly 15-16% of my business. One of the big players doesn't share numbers with Nielsen, and it's an estimate. So Nielsen numbers for market share, we would look at broadly from a directional perspective, not an absolute number.
Okay, all right. Let's talk about some of the inorganic growth that you've done in the past. The Capital Foods and Organic India business. Is it on track to move towards that ballpark 500 crores per quarter number?
Broadly, it is on track. Nigel, last quarter in the GST recalibration, where most of my the good part for us was salt there was no GST earlier itself. It was exempt. Tea was in the 5% category, so there was no disruption there. My growth portfolio, which is Soulful, Capital Foods, Organic India, and coffee and ready to drink, all of them moved from the 18-12 bracket to the 5. So there was a bit of hiccup at the end of the quarter. Otherwise, we were in comfortable territory. Overall for the quarter, Organic India still, we've delivered a 30% growth. Capital Foods 9, coffee was 56. So we are in the ballpark of that. Overall, for the growth businesses, we've maintained that they will account for 30% of our volume and will grow at 30%. They grew at 27, accounted for 32%. So we were in the ballpark of our guidance.
All right, you were in the ballpark of the guidance. You know, the thing that stood out was the ready-to-drink beverages, which was basically includes Narishco as well. And this, the street was expecting a bit of a decline largely, or a slower growth because of the extended monsoons. The season wasn't very favorable. Despite that, you grew about 31%. So what's the quarterly run rate that we should look at for Narishco, and by when does it cross that 1,200 crore mark?
So Mangalam, this year we are on track to cross the 1,000 crores overall. So we remain quite confident of continuing to deliver strong 30% plus growth in Narishco as we go forward. We did deliver 30% volume growth, 25% value, because we did a lot of re-indexing of pricing of retail margins last year about the same time. So we're cycling that. Going forward, we're cycling benign numbers, and therefore we remain confident of the 30% plus in Narishco.
All right, and final question, a smaller part of your business, which is Tata Starbucks, opened a fewer stores in this quarter as compared to the run rate that we've seen earlier. Are you calibrating your expenditure out there? What's the outlook here? Because globally as well, it is a category which is facing a fair amount of headwinds.
So Mangalam, in India, coffee has a huge runway both out of home and in home. And Starbucks is a play in the out of home space. We remain very, very bullish about that space. Bar the past probably 15 months or so, we've seen an overall slowdown in the QSR space, and we had stress on same-store sales growth. And therefore, we slowed down our outlet expansion. The longer term number doesn't change as much. The good part was last quarter, we saw positive same-store sales growth and an 8% top line growth. EBITDA grew far faster than top line. And overall, we were EBITDA and EBITDA positive. So the business is on a strong footing.
Okay, all right, Mr. D'Souza. Always a pleasure talking to you, sir. Wishing you well for the second half of the year. We're tracking some of these targets. Have a good day ahead as well.
Thank you.
Time to slip into a short break. You come back, we'll focus on the technicals of the market. Somal Mehta will join in to help us out with exactly that as the markets trend towards the low point of the day.